Hello learners, I am Yogendra and today we will discuss about Fundamental Analysis Class 7 and the topic is Analysis of a Company. I am making this video in English because some of my English students who do not understand Hindi requested me to make a video or the course in English language. So, in analysis of a company, there are 3 steps. Okay, the first step is to identify the stages in the company. There are mainly 3 stages. As you have studied in your 12th standard business studies, that there are 3 stages. The first stage is survival, the second is profit, and third one is growth. The first stage, survival, is where the company mostly do not earn profits, or even if the company earns profits, the profits will be minute or very less. So the most important part when we do company analysis for making an investment or for making informed decisions, we should understand this, that whether the company is in survival stage, profit or growth stage. If the company is in survival stage, then the company should not be making profits. Okay, and the second stage is profit stage. In the profit stage, the company can earn profits and the profits will be in a trend from low to high up to a substantial point. Okay, then the third is growth. What is growth? The company when earns more and more profits, after few years the company is said to be in the growth stage. Then after analyzing the stage of the company, we have to see technical analysis, that is the chart of the company. If the chart of the company, there are 3 stages again in the chart of the company. Let me take the marker and then I'll explain. See, so like survival, profit and growth, in the fundamental analysis, we do top, middle, bottom in the chart analysis. So what is a high or top of the chart? You all know, if the company is making chart like this, then this is known as the top and this is known as the bottom of the company in technical analysis. While in the middle analysis, this is middle, this is also middle. So in middle we have 2. Either it will be in positive stage or it will be in negative stage, means downward stage. So where are we going to invest? We can invest at any point, but it is important to note that if you make the investment at this position, it will be highly beneficial. So in the technical analysis, we have to look at the chart to understand whether the company is at the high, middle or at the lower of the chart. Okay, after this we need to find out the amount. The amount of investment will depend on the stages and the technical analysis. See, the amount will be small if the company is risky, that is, if it is in survival stage. Then from small amount you will start investing, and slowly and gradually you will increase the amount in that company. Okay, that we will discuss later. So this is part 1 of our video analysis, that is fundamental analysis of a company. In the earlier videos, I have discussed few important topics, that is earning per share, PE ratio, industry PE ratio, debt equity ratio, and many more. So this is class 7th. Before studying class 7th, I would request you to go to the last 6 classes very nicely and make notes. Also, if you face any difficulty in learning from them, practice them and watch the videos as many times as you can. Okay, so the important thing about analysis of a company is to know about the survival stage, the profit stage, or the growth stage. So how do we know if the company is in survival stage? If the company has started and from past few years the company is struggling to make profits. See, these are the stage related to sales. This is something very important. The sales of the company, if we make bar charts, in the first year the sales of the company were this. The second year the sales of the company were this. Then so here the company was making losses. From here the company started earning profit, and afterwards the growth phase will be there. Understood? Kindly ask doubts in the comments section, that I will answer. Okay? So here identify the stages. If the company is in survival stage, invest smaller amounts. If the company is making profits, then look at the consistency of the profits. If the profits are consistent, you can invest small to medium amount depending on the size or the earning per share of the company. Okay, then if the company is in growth stage, then look at the EPS, compare the PE with the industry, and finally the debt equity ratio. And if the company is able to cover its interest cost, then you have to look at the debt equity ratio along with earning per share, price and earnings ratio, and cash flow statement analysis. After doing the cash flow statement analysis, ratio analysis, profit and loss analysis, and the proper balance sheet analysis of the company, you can increase your investment to the high point. Understood? Okay, so let's move on to the next part. Part 2 of the video. The first part is related with analysis of a company. The second part is related with my learnings in stock market. What have I learned in stock market? See, I have been in this market for around 15 years from now. Even in my YouTube channel, if you look at, it was opened in, or I had subscribed to YouTube in 2011. And before that, before starting YouTube or Facebook, I had started learning stock market and searching for the brokers or the investors to learn from them. So my learnings I'm going to share with you. The first thing that I have learned is stock market is not a place for speculation. So what is speculation? See, share market is a place to invest, to do proper learning and not just to trade. The people who trade without understanding that they can even lose the amount. So share market is not a place for speculation. This is a place to invest, to study, to learn and to grow your money and not to earn money. The people who come to stock market to earn money loses all the money. Understood? This is a place for the rich people to become richer. Stock market is not a place where you can earn your livelihood. This is not a place where you can go and simply just invest without knowing anything. This is not just the place. So kindly do your research, kindly study, kindly invest time in the stock market, at least 2 to 3 years or 4 years or 5 years, and then invest your hard-earned money. What most of the people do in stock market is they bring their parents' money, their ancestral property into the stock market and loses everything. So this is very important to understand that stock market is not a place to trade. It is a place to invest. Second thing is, what I have learned here is, it is a place for the rich people to become more richer. It is stock market is a bridge between the poor, between the rich and the company. The people who have savings, they can invest their savings and in return the company will grow their savings. In most of the cases, in some cases, they deteriorate the money. In most of the cases, they grow the amount given by the saver. Understood? So this is not a place to earn money. It is a place for compounding. It is a place to grow your money. Understood? So just invest, and if you are trading, even then you will need learnings. Next thing is learn fundamentals or fundamental analysis done by the rich. How do rich people invest their money? Do they invest on the basis of technical analysis? Do they invest on the basis of fundamental analysis? They do invest their hard-earned money with the help of wealth advisors. Wealth advisors or investment bankers are the people who are highly qualified, who have earned that knowledge, who have gained that knowledge by investing time and money into that specific sector. This is a sector where you learn and then you earn. Okay? So do not speculate. It is a place for the rich people to become more richer. Learn fundamental analysis because this is the only way to make money. As you have heard that 95% of the traders lose money in the stock market. But it is equally true that 95% of the investors earn money in the stock market. 95% traders lose money in the stock market. 95% of the investors earn money, grow money in stock market. So what is it? You want to be in this 95 or the other 95? So try to learn to grow. Okay? Do not trade, start investing. Okay? To start investing, you need to learn investing. And to learn investing, you need to learn fundamental analysis. What is fundamental analysis? So let me tell you, fundamental analysis is the analysis of a company's accounts. What is the most important thing? That is accounts. If you learn the way accounts are prepared, a company do not speak. Then what thing in the company speaks? Their books of accounts. If you will identify in the previous years, all the traders have lost money. That is the 95%, but the investors have earned money. So who are the investors? Investors are the people who invest their money with a time span of more than 1, 2, 3, 5 to 10 years. Okay? So the next is, it is all about accounts. See, I told you, I have been teaching accounts for past 15 years. And I have understood that it is all about accounts. For the past 10 years, in those 15 years, I have the experience of 15 years, out of which 10 years I was making losses. What was I doing? I was trading. I was speculating. I was investing on the basis of only technical analysis. So if you are going to invest only on the basis of charts, you are going to lose. But if you combine those charts with the fundamental analysis of a company, with the EPS, with the PE, with the debt equity ratio, then you will earn definitely. So technical analysis is pure speculation. There you can earn as well as you can lose. However, in fundamental analysis combined with technical analysis, you can earn as much as you want. Okay? So the next thing is, now the part 3. We are coming to part 3 of investing. Revision is the key to success. It is not just that you're watching my video only once or anybody's video or lecture only once. The more you watch the same thing again and again, the more you learn. In my past 15 years of teaching, I have learned that revision is the key to success. Re means again and vision means to look at. Okay, so again looking at the same thing with a different perspective, because the first time you learn is the first time. But when you go to the topic second time, it is not just second. First time's experience comes when you're watching the video another time. So what is important? Something which is very important is revision. Revision is the key to success. Please make this thing clear. Okay. In those 15 years, 5 years of mine are I have started investing and I have started to earn. When you invest, you earn. That is why I decided to make this course for my children. The people who came to me said, kindly teach us. So I am teaching this also for my daughter. She is just 2 years old, and when she will grow up, she will watch these videos. so that she can learn how to earn. Okay? So next part 3, first point is, if you can invest in revision, only then you can earn. If you can invest in revision and going through the video again and again, in going through the notes again and again, you will learn to earn. And if you are not revising properly, you are not going to earn or learn. If there is no learning, there is no earning. So if you want to earn, you need to learn. Okay? Nice. The second thing is, do not look for the many strategies at once. Just master one strategy at one time. Master one art and not all to be successful. If you want to be successful in stock market, just understand or master in one style of investing or trading. You need not to understand or learn all the styles, just one. Okay? Second, experience and time will make you richer. It is not just the hard work. It is the experience and the time which you have invested in stock market. If you have invested 5 years, then you are 5 times more experienced. Okay, so start as early as possible. When you start early, you get the first mover advantage into the market. You get more experience, and the more experienced you are, the more profitable you will be. Understood? Next, experience and time will make you richer. Earning is learning. In stock market, there is a saying, if you are learned, only then you can earn. If you want to earn, then you have to learn. So kindly learn to earn. And the foremost important part of this video is, the most important part of this video is part 4. All the 3 parts are important. First part is the most important. Second and third are the most important part is the third one. Second is also important. Everything is important. But this part is very important. Here I have combined the strategy. I am going to give you my strategy. The strategy which I follow and earn. Okay? See, kindly watch it very carefully. Combination strategy. First, look at the stage of the company. If the stage of the company is survival, then see the chart. If the chart is at the high, then chart is at the high, stage is survival, don't invest. Do not invest. No, not required at all. If the stage is survival, chart is at the low, invest. Slowly, and then increase the amount gradually. For example, I am giving it to you. The most important is Zomato. Zomato, I think, listed at around 150 rupees. Then what I did is, I did the fundamental analysis, and I understood that the company is in the survival stage. At that time, the company was not earning profits. So I looked at the chart, and then slowly it started falling. I waited. I started investing slowly, like 1,000, 2,000, 5,000. And there was one day I remember that the chart of Zomato hit around rupees 40. And there I had invested huge amounts. I was aware that this is the low point. So slowly, when the chart was at the high, I started slowly. And then when the chart came to the bottom, I invested more amount. Then the company started moving upwards. From that low, the company did not go more lower. Understood? When you invest at the bottom, your risk is the least. So it is also known as bottom fishing. Okay, so see this. I invested in that company, and now today, after 1 year, the company is 4 times of that price. It is around 160 to 180 rupees. Now the company is in profit stage. At that time, it was in survival stage. So the learning is, when the company is in the survival stage, then look at the chart and try to find out the bottom of the chart. Because slowly the company will move out from the survival stage, because the sales of the company was growing. If the sales are growing, the losses are narrowing, then the company is moving towards this stage. So this is the first stage, second stage, third stage. Like we have in our childhood, we were surviving till the age of 18, and after 18 we started earning, profitable, and after that we just grow the money, grow ourselves. In the same way, it is the company. Okay, so the most important part is to understand the stages, and along in the stages also, you cannot invest heavy amounts when the company is in survival stage. You may not know whether the company will survive or not. Like Paytm, the Paytm is not able to survive yet. If anybody would have invested at the peak, he would have lost. He would have lost all the money. So it is very important that you find out the bottom of the Paytm to invest your money, because the risk will be least. Understood? In the survival stages, invest lower amounts. When the company becomes profitable, you can invest more than the lower limits. And when the company makes consistent profits, you can invest heavily. Profits stage is profit. If the company is in profit stage, then look at the chart, and if the chart is at the low, then invest medium to high amounts. If the company is in growing stage, look at the chart, and the chart is at bottom or low, then you can invest high amounts. So you can invest high amounts only in the companies which are in growing stage. Well, there are chances of becoming multi-baggers when you invest in survival stages. But it is better to not to find multi-baggers. Just invest in the growing or growth stage stocks and compound your money, and you will be a multi-bagger. Because if you invest in 10 stocks to become multi-baggers, they are not going to become multi-baggers. Only one will become multi-bagger, and the others will become beggar. Beggar means, and multi-bagger, that is different. Okay, so think about this. The most important part is part 1 of the video. The second and third parts are also important, and the fourth part is the summary or the cream. Okay? If you like the video, kindly like it, subscribe to the channel and share it with your friends. For more videos, kindly comment me whether you want the videos in English language or Hindi language. Thank you so much. Have a nice day. God bless you all.